What's up, YouTube? Welcome to my second video of earnings seasons Q1 2025. Today we're going to discuss the companies Google, Microsoft, and Meta. All right, let's start with the first one, Google. The earnings were from April 24 last week. We saw revenue growth increase 12%. It's looking good. Google services increased 10%, cloud 28%, operating income 20%, operating margin expanded by 2 percentage points to 34. That's looking very good. Usually, a good sign of a strong company is high margins, high gross margins, high operating margins, high net margins. An operating margin of 34% is very good. And net income increased 46% and EPS 49%. Okay, so far it's looking good. Then the segment results. Here we can see clearly Google Search 50 compared to last quarter 46. So this is very important because here we can see that Google Search is still growing despite people been saying for a long time that ChatGPT from Microsoft will take over all its growth, it will take over all its customers. It's not happening. The past quarters we've been seeing steadily growing, a steadily growth for Google Search, so still staying strong in here. Same goes for ads and all the rest of the stuff. Google Cloud as well, major growth, and Google Cloud is right now the third biggest cloud player in the world after Microsoft and Amazon. So this is looking very good for Google. Then stock repurchases. On April 23, 2025, Alphabet's board of directors authorized the company to repurchase up to an additional 70 billion of its Class A and Class C shares. So this is a very good way to thank the shareholders for their loyalty, because if the company buys back shares, you own now a bigger piece of the pie and therefore a bigger part of the revenue and profits. So therefore, one share is worth now more. So this is good news for the company Google. Okay, let's jump to the next one. The second one is going to be Microsoft. And Microsoft released earnings yesterday. Here we can see revenue was up 70 billion and increased 13%. Operating income was 32 billion, increased 16%. Net income 25.8 billion, increased 80%. And the earnings also increased 18%. Same with cloud revenue, up 20%. Like I said, cloud is going strong for Google as well for Microsoft. Microsoft is second biggest cloud player in the world, and we see that a big part of growth from either Google and Microsoft is coming from the cloud segment. Here too, we see most of things are going up. So Microsoft is just a very strong, resilient business who keeps performing and performing quarter over quarter. Only thing that saw a slight decrease is product, but for the rest, everything is going up. Operating income very strong, going up. Net income going up. Cash, it has piles and piles of cash and cash equivalents. Total assets very high compared to liabilities. So that's fantastic. Here we can see as well gross margin percentage 69%, operating income percentage 46%. Remarkable, very good. Means Microsoft is a very strong company. Effective effective tax rate 18%. Very good. Cash flow up 16% year over year. Free cash flow down a little bit, but that's because companies are investing major amounts of cash to win the AI race. So this is also a good thing because Microsoft is a very strong company that has a good balance sheet and has the right amount of funds to participate in this AI race. So it's definitely not going to miss out on this. Then the third one, last but not least, Meta. Meta, a very strong company. Just like Google is currently involved in like a court case because some people have been saying that Google and Meta are too big and they are just basically taking away all the competition. And Meta is accused of taking away all the competition competition by acquiring Instagram and WhatsApp a few years before, a few years ago. And that's also why Meta has, alongside with Google, one of the lowest PE ratio, one of the lowest valuations of all the Magnificent Seven, basically, because people are already pricing in that Meta and Google can get hurt if the judge and if the court decides they have been basically misusing or abusing their monopoly. But in my opinion, it's still a magnificent company. Of course, there's a reason why it's called the Magnificent Seven. It's a magnificent company alongside with Google, alongside with Microsoft. And even if the court decides that Meta must split up or Google must split up, it's still a phenomenal company. In my opinion, it stays that way. So revenue up 16%, operating margin 41% compared to 38 last quarter. That's really good. Effective tax rate going down 9% compared to 13 last quarter. It's really good. Earnings per share going up. Daily active people, 3.43 billion people out of the 8 billion people alive. So Meta keeps surprising everyone with this number, but it just keeps going up and up and up. The ad revenue is going up. Average price per ad is going up. So this is looking all good for Meta. Then the outlook. So they expect the revenue next quarter to be around in the range of 42.5 to 45.5 billion, and this quarter was also like 42 billion. So that's looking good. Revenue is steadily going up. For the full year, they expect the expenses to be like 113 to 118 billion. That's a little lower to the prior outlook, so this is looking good. Of course, this is because Meta is just like Microsoft and Google in this AI race. It's spending a lot of money, a lot of resources from the free cash flow to keep up with the competition, and I believe right now it's doing wonderful. And the tax rate is going to be in the range between 12 and 15%. Here a little summary in the earnings presentation. And in my opinion, the most interesting thing here is the operating margin. As we can see from Q1 until Q1 2025, it rose from 25 until up to 41, and this is remarkable. A few years ago, Mark Zuckerberg told about the year of efficiency. He fired so many employees he didn't need. They cut costs, and he cut down a little bit on his promise of the metaverse, and it's been paying out. It worked wonderful for them. Operating margin from 25 until 41, alongside, of course, with the growing revenue, 28 until 42. So this is looking terrific for the company. This is also good effective tax rate going down from 22 until just 9. Looking all good. Of course, capital expenditures going up because the AI situation. And like I said, this is remarkable. People are still wondering how much further Meta can grow, how much more daily active users they can have. But it started from 3.0002 2 years ago until 3.43. I think if it keeps up this pace, it will reach 4 billion in a few years. As more and more people in the world are getting access to internet, this will rise, and I have no reason to doubt that it's not gonna hit 4 billion in a few years. So this is also looking very good. Of course, slowing down a little bit, but yeah, that's to be expected if almost the whole half of the world population is already using your services. Free cash flow also looking good, a little bit down compared to last quarter, of course, because of the huge investments in AI. So that's it for this episode. Leave any questions you might have down in the comments below. Don't forget to like, comment, subscribe, and I catch you in the next episode.